Hey everyone, and welcome back to the Deep Dive, your shortcut to being genuinely informed. Today, we're diving headfirst into a topic that's not just, a fleeting trend, but a complete game changer for how our money moves, how we invest, even how we get insured. Generative AI in banking, financial services, and insurance, or BFSI. Let's try and unravel this fascinating transformation.
Absolutely. Yeah, we've spent a lot of time digging into some, well, really insightful sources for this deep dive,
Okay.
taking a comprehensive look at how generative AI is evolving and its really profound impact on the financial sector. Our mission for you today is basically to provide a clear, concise picture, the immense opportunities this tech presents, the significant hurdles it faces, and some crucial considerations as it sort of integrates into our lives.
Right.
You're going to walk away with some surprising facts and I think a few real aha moments, I promise.
It's easy to get caught up in the current headlines, isn't it? But to really grasp the power generative AI holds for finance today, we probably need to quickly rewind its remarkable journey. This isn't just an overnight thing, right?
No, not at all. Generative AI actually has roots stretching way back. Think 1950s and 60s. We saw these early rule-based systems, initially focused on generating pretty simple artistic patterns, like basic melodies or geometric designs.
Huh. Simple patterns?
Yeah. Then the 70s and 80s brought a pivotal shift towards machine learning. Researchers were aiming to mimic human cognitive processes, essentially teaching machines to learn from data instead of just following explicit rules.
Okay, so learning, not just following orders.
Exactly. This early work really laid the groundwork for what came later, even if it didn't look much like today's AI.
And what's truly fascinating to me is how these foundational ideas from like decades ago seem to fade a bit, only to reemerge with such, explosive power in recent years. It's almost a redemption story for some of these concepts.
Indeed. Yeah, the late 1980s and 90s saw the resurgence of neural networks. Algorithms like backpropagation came back strong.
Back propagation. Remind us quickly what that is.
Sure. So backpropagation is basically how neural networks learn. They make a prediction, measure how far off it was, and then they adjust their internal connections, their weights, to get closer next time. It's a feedback loop.
Got it. Learning from mistakes.
Precisely.
Yeah.
And that marked a critical juncture. But the real breakthroughs, what we call deep learning, they exploded in the 2000s. This led to things like generative adversarial networks, GANs, famously introduced by Ian Goodfellow back in 2014.
GANs, right. I've heard of those.
Yeah, you can think of GANs as two AIs locked in this perpetual game. One's the generator, trying to create something so real it fools the other, and the other's the discriminator, trying to catch the fake. They just keep pushing each other to get incredibly good.
At generating what, like images?
Hyper-realistic images, yeah.
Yeah.
Or even synthetic data for training other AIs.
Wow. So a bit like a digital forger and detective constantly improving each other. That's a powerful feedback loop.
Exactly. And then just a few years later came the transformer architecture, introduced in 2017 by Google researchers. Famous paper title. Attention is all you need.
Catchy title?
It really was. And it completely changed natural language processing, NLP. Before transformers, models really struggled with long sentences, understanding how words at the beginning relate to words at the end. Long-range dependencies.
Right, context across the whole sentence.
Exactly. Transformers introduced this attention mechanism. Lets the AI weigh the importance of different words, sort of focusing across the entire text. This capability paved the way for the large language models, LLMs, that are now seemingly everywhere. Think OpenAI's GPT series, Google's BERT.
Okay, so that's the leap to models that can really understand and generate language.
And not just language. Images, code, financial data, new coherent content.
So we've gone from simple patterns to these super sophisticated neural networks. And that's the foundation that's now fundamentally transforming finance. We've traced the lineage of this powerful tech. Now, let's bring it squarely back to, well, our wallets and investments. How is this sophisticated AI engine actually being put to work? Day-to-day operations in banking, investment firms, insurance.
Okay, yeah, connecting it to the bigger picture.
Yes.
Generative AI is fundamentally altering operational processes, customer experiences, core business strategies, right across the BFSI sector. It's not just about incremental improvements. It's creating entirely new capabilities.
Okay, where should we start? Banking.
Let's start with banking. Perfect. It's revolutionizing everything from routine transactions to complex credit assessments and crucial regulatory compliance. On the front end, the customer-facing side, you're seeing sophisticated AI-driven chatbots and virtual assistants.
Like Bank of America's Erica.
Exactly like Erica. She's not just answering FAQs, right? She's proactively providing personalized financial advice, suggesting budgeting tips, even helping customers track spending patterns.
Wow.
And Wells Fargo is doing similar things, using AI chatbots to recommend suitable products based on a customer's unique financial profile. It makes the whole experience much more tailored.
And it's not just the customer-facing stuff, I assume. What about behind the scenes, where the real heavy lifting happens?
Precisely. That's where a lot of the efficiency gains are. In back-end operations, it significantly enhances data analytics, turning massive volumes of raw data into actionable insights through sophisticated interactive dashboards, smart dashboards.
Making sense of the data flood.
Exactly. And then there's robotic process automation, RPA. Yeah. Software bots automating routine, rule-based tasks. Think data entry, reconciliation, compliance checks. This drastically reduces human error, speeds things up, and importantly, cuts operational costs.
Any real-world examples there?
Sure. Mitsubishi UFJ Financial Group, MUFG. They've deployed Pepper robots in some branches. These robots assist customers with basic queries, which frees up the human staff to focus on more complex, high-value advisory roles. Things that need empathy, strategic thinking.
Interesting. Robots handling the simple stuff.
Yeah. And we're also seeing tech giants like IBM and Microsoft Azure AI using generative AI to modernize old legacy applications, optimize IT infrastructure for major players like Walmart, and they're reporting things like 25% cost reductions, significant performance improvements. So real impact.
Okay, let's shift gears to investment banking. That's always been about speed and razor-sharp insights, right? Milliseconds meaning millions. How's generative AI accelerating that game?
Oh, it's driving a profound transformation there. Moving beyond simple automation to genuine augmentation of human capability. AI-powered tools enable far more efficient and precise algorithmic trading.
How so?
Well, these systems analyze vast, complex data sets, market news, social media sentiment, geopolitical events, company financials at speeds no human could possibly match. They identify microtrends, execute trades in real time. The sheer volume and velocity of data processing allow for strategies that were just impossible before.
Okay, speed and volume.
But here's what's really insightful. Generative AI can actually simulate future market scenarios.
Simulate.
Yeah. It allows traders to stress test their strategies against countless possibilities before making a single real trade.
Whoa. That's a huge aha moment, like you said. It's not just reacting faster, it's proactively modeling the future.
Exactly. That's a major step up. Then in portfolio management, you have robo-advisors like Wealthfront using AI.
Yeah.
They optimize portfolios, dynamically manage risks, offer personalized investment strategies.
Personalized how?
Well, they're not just generic suggestions. They align with an individual client's needs, their risk tolerance, their preferences, and they constantly rebalance and adjust based on market shifts. The aim is enhancing returns by being super responsive.
So that ability to personalize financial strategies for millions of people, it's almost sci-fi level, but beyond just tailoring, what's the deeper implication for the client-advisor relationship when an AI is so deeply involved?
That's a really critical point. LLMs aren't just for back office stuff. They're improving client communication dramatically. They power intelligent chatbots that can provide real-time market updates, explain complex financial products, offer personalized advice on demand 24/7.
So freeing up human advisors.
Exactly. Freeing them up to focus on building deeper relationships, handling the more complex cases, offering strategic guidance that still needs that human touch.
Makes sense. What about security? Always a huge concern in finance.
Absolutely crucial. Platforms like PayPal, for instance, use AI-powered anomaly detection. They monitor millions of transactions instantly, flagging suspicious activities, minimizing losses.
How is that different from traditional fraud detection?
Well, traditional methods often look for known patterns of fraud, but generative AI, because it understands normal behavior so well, it can actually spot entirely new fraud schemes, patterns that have never been seen before.
How?
By identifying even the slightest deviation from the norm. It's like having a digital detective that can predict the next crime before it even has a precedent.
Wow. That's a surprising level of proactive security. So essentially, it's like having a team of thousands of highly vigilant fraud analysts, but they never sleep, never take coffee breaks, and they're constantly learning. That's pretty formidable.
It really is. And just to give you a really specific example from our sources, there's even a detailed walkthrough of building something called a retrieval augmented generation, or RAJ, application specifically for stock recommendations.
RAJ, Retrieval Augmented Generation. Okay, what does that do?
So RI basically lets an AI tap into and synthesize information from a vast, up-to-date knowledge base. It's not just relying on its initial training data, which can get stale.
Ah, so it pulls in current info.
Exactly. For stock recommendations, it can pull in real-time market data, company reports, news, analyst ratings, giving you highly relevant and current answers using tools like Lamy Index and Olama.
So if I ask,
So if you ask which stocks should I buy, it can provide specific data-backed recommendations. The example given was Apple, AAPL, Microsoft, MSFT, NextEra Energy, NEE, and Johnson & Johnson, J&J, all based on current market analysis.
and the key there is data-backed and
Yeah.
current.
What's crucial for finance here is that ARG isn't just generating plausible text, it's grounding those recommendations in verifiable, real-time market data. That addresses a huge challenge in AI for finance, the need for explainability and up-to-date accuracy, not just a creative guess.
Got it. Very important distinction. Okay, let's move to insurance. It often feels like one of the more traditional sectors, rooted in actuarial tables, historical data. How is generative AI truly bringing innovation there, moving beyond just digitizing old processes?
Yeah, it might seem traditional, but what's fascinating here is how it's enabling truly personalized policies and real-time dynamic risk assessment.
How does that work?
Take telematics and auto insurance, for instance. The little devices or apps that track driving.
Sure.
Generative AI analyzes that data, how you drive, where you drive, typical speeds, braking patterns. It simulates driving behaviors and conditions. This allows insurers to offer personalized premiums based on your actual real-time driving data, not just broad demographic averages.
So good drivers really can save money.
Potentially, yes. And health insurers are taking this even further, using data from wearable devices, fitness trackers, smartwatches,
Right.
to monitor health metrics. Generative AI can then generate personalized health recommendations and even insurance incentives to encourage healthier behavior.
Incentives, like
Right.
lower premiums.
Exactly. Companies like Vitality have seen remarkable results with this approach. They report something like 78% of their customers actually improving their health outcomes.
Wow, so it's a win-win. Better health for people, lower risk for insurers.
Precisely. It really shifts the dynamic.
That definitely sounds like a paradigm shift from the old one-size-fits-all approach to something incredibly dynamic. It sort of redefines what risk even means in insurance.
It does. And it's also leading to the rise of things like on-demand and usage-based insurance, UBI models.
On demand, like pay as you go.
Kind of. Your coverage isn't fixed for a year. It can be activated just when you need it. Offers incredible flexibility.
Give me an example.
Imagine needing special insurance only for a specific weekend trip. Or maybe for your drone only when it's actually flying.
Ah, okay. Very specific.
Right. Generative AI streamlines the creation and customization of these highly granular products. It can even help predict when and what type of coverage might be needed. It's essentially creating insurance that adapts to your life and your specific activities in real time. Makes it far more agile, more responsive to modern consumer demands.
We've painted this picture of incredible potential, huge changes. But as with any powerful technology, implementing generative AI across an entire sector as complex as BFSI, well, it isn't a walk in the park, is it? What are the biggest hurdles? The main challenges institutions are facing as they try to bring these innovations to life?
Yeah, that raises a really important question. The path to mainstream adoption is definitely not without significant hurdles. These challenges fall into several key categories.
Sure.
First, on the technical front, one of the main challenges is just integrating AI with existing legacy systems.
The old stuff.
The old stuff, exactly. Many financial institutions operate on infrastructure that's decades old. It simply lacks the flexibility, sometimes even the processing power, for modern AI. It's kind of like trying to blend modern, high-speed architecture with ancient, rigid structures. It often requires a fundamental overhaul, not just a simple add-on.
Sounds expensive and difficult.
It can be. Then there's the constant battle for data quality. Generative AI models are only as good as the data they eat.
Garbage in, garbage out.
Precisely. Biased, incomplete, or just plain dirty training data could lead to inaccuracies, unfair outcomes, or even system failures in critical financial applications. That's a huge risk. And finally, on the technical side, we have something called model drift.
Model drift.
Yeah, it's where the predictive accuracy of an AI model declines over time because the underlying data patterns it was trained on change. Markets change, customer behavior changes.
So the model gets out of date.
Effectively, yes.
Yeah.
For instance, JPMorgan Chase's AI-driven investment strategies. They're continuously affected by evolving market conditions. They need constant monitoring and model maintenance.
How do big firms handle that?
Well, Goldman Sachs, for example, they recognize This is a major issue. They actively address drift with sophisticated tools for real-time detection.
Yeah.
That lets them make timely adjustments before it seriously impacts performance.
Okay, so technical challenges. Integration, data quality, model drift. Got it. We've talked about the tech hurdles, but people are at the heart of any organization, right? How is the human element, the workforce itself, reacting to this massive shift? I can imagine there might be some apprehension.
Absolutely. That's the organizational side. And we often see significant cultural resistance to AI adoption.
Fear of losing jobs.
That's definitely part of it. The fear of job displacement is a very real concern for many, but it's also the daunting prospect for employees of having to completely reskill, learn new ways of working, or even feeling like their years of invaluable institutional knowledge are being somehow devalued by a machine. That could be tough.
Yeah, I did see that.
There's also often a pervasive lack of AI expertise within the existing workforce. That means substantial continuous training programs are needed.
Which costs money.
Exactly. Which brings us to the economic considerations. The high initial costs of developing, deploying, maintaining these complex AI systems, coupled with doubts sometimes about a clear and immediate return on investment, ROI, that can make leadership hesitant to commit fully.
So how do you overcome that resistance?
It requires really robust change management. Our sources highlight examples, like a hypothetical future bank, applying Cotter's 8-step process for change.
What does that involve?
Things like strategically creating a sense of urgency, building guiding coalitions, getting key people on board, and generating short-term wins to show progress and build momentum. It's about fostering broader adoption and, crucially, alleviating those anxieties. It's very much a human problem, not just a technical one.
Okay, technical, organizational.
Yeah.
Oh, what else beyond those? What about the ethical side of things, especially when AI starts making decisions that directly impact people's financial lives? That feels like a really delicate balance to strike.
It is, and it's a critical area. When AI is involved with sensitive financial information, data privacy becomes a paramount concern.
Obviously.
And we've seen major breaches, like the Equifax incident. Those underscore the lasting impact and severe consequences of data mishandling. Trust is hard to win back. Then there's the serious risk of algorithmic bias.
Bias, how?
Well, if AI systems are trained on historical data, and that data reflects past societal biases, intentional or not, the AI can inadvertently learn and perpetuate that discrimination.
Leading to unfair outcomes.
Exactly. The Apple Card, for instance, faced accusations a while back of giving women lower credit limits than men, even when they had similar financial profiles. That sparked a big debate.
Wait, I remember that.
And in insurance, if AI models are trained on limited or skewed data, they could lead to inflated premiums or coverage restrictions for certain demographic groups without a clear, fair reason.
And beyond bias.
There's also the potential for misuse of generative AI itself. Technology is powerful. Think about deepfakes being used for sophisticated financial scams.
Or the rapid spread of AI-generated misinformation designed to manipulate markets or defraud individuals. Those are serious risks.
Okay, so with all these challenges, technical, organizational, ethical fight, how do we ensure these incredibly powerful tools are used thoughtfully and responsibly, especially in such a sensitive sector like finance?
This leads us straight to the imperative of responsible AI. It's not just a buzzword, it's a necessity. It's about ensuring a core set of principles, things like transparency, accountability, fairness, and inclusivity, are baked into every stage of AI design and deployment. How do you make that practical?
Crucially, it means implementing robust human oversight in critical decisions. Think loan approvals, complex investment strategies. The AI should serve as a powerful assistant, maybe, but not the final authority in high-stakes situations.
Humans stay in the loop.
Yes. Many institutions are now developing comprehensive AI governance policies. We see examples like Capital One putting robust data management frameworks in place, or BBVA having ethics committees that regularly review their AI-driven loan approval processes specifically to identify and prevent bias.
And what about regulations?
They're catching up. Regulatory frameworks like GDPR in Europe and CCPA in California are continuously evolving to address these new AI challenges. And financial institutions like Alliance, for example, are implementing really robust data management practices to ensure they stay compliant.
So it's a multi-pronged approach.
Absolutely. Ultimately, ongoing collaboration between financial institutions, the tech providers building these tools, and the regulators setting the rules is absolutely essential. We need it for setting clear standards, sharing best practices, and fundamentally fostering trust in this rapidly evolving landscape.
What an incredible deep dive into generative AI and BFSI. It's crystal clear that this technology holds immense transformative power. From personalizing our banking experience, revolutionizing trading, tailoring insurance policies like never before, the potential is huge.
It really is.
But as you've laid out so well, with that power comes a profound responsibility, a need to navigate the complex technical, organizational, and maybe most importantly, the societal and ethical challenges inherent in its adoption.
Absolutely. The future of finance, with generative AI increasingly at its core, really hinges on a strategic, thoughtful, and collaborative approach. By proactively prioritizing things like data quality, ensuring responsible deployment, fostering continuous learning and adaptation within organizations, and embedding human-centric principles right from the start. Then we can harness AI's immense potential. We can enhance efficiency, yes, but also enrich customer interactions. And, crucially, maintain that vital trust in an increasingly digital financial landscape.
It really is a delicate balance, isn't it? As generative AI becomes this undeniable force in our financial lives, transforming everything from, our credit scores to our investment portfolios, it leaves us with a question to think about. How much transparency and direct control are you as a consumer, as an investor, willing to trade? Trade for the promise of ultimate convenience and these hyper-personalized services that AI offers. Something to mull over. Think about that for a bit. We'll catch you next time for another deep dive.